Hi guys, my name's Tim. I tend to go off on tangents, so I'm just too excited. And in the last video, I started talking about the Bitcoin bottom and where it's likely to be in the coming weeks. So make sure you check out that video. But in today's video, what I'd like to talk about is how important the Bitcoin bottom is. And it's not about making money. This is about understanding the market. And if you understand the market, the money will come. Okay, so having knowledge of the markets and where they're going and where they've been and how markets, not just Bitcoin, but how various assets work and how the market as a whole works, um, that'll help you make better decisions. Now, everything I'm saying is not financial advice. I'm just communicating what's on the charts and some trends and some clues that we're seeing in the data, in the evidence over 100 years or so of the stock market, as well as the last decade or so of Bitcoin and how they interrelate and how we can learn from one another. Okay, so what I want to talk about today's video is the tops of Bitcoin. So you can see here 2013, we had a couple of tops, 2017, 2018, and right now, which is the current top, which is 2021, and we will have tops in the future as well that will go higher and higher again. Um, so it was a top here too. You could also argue in 2019 a small one, some small ones down here, and so forth. Um, Everyone focuses on the tops. Okay. In today's video, though, I want to focus on the bottoms. Okay. This is what really matters. Okay. So the bottom here, what I've got is moving averages. So in fact, just to simplify things, I'm going to turn off the 50-day moving average. What we've got here is the Bitcoin price on a daily chart. These are all daily fluctuations. And down the bottom, I've got the 1400 day or 200 week or basically almost 4 year moving average. This appears to be the bottom of Bitcoin. And mathematically, this is where the market sees the bottom of Bitcoin. Okay, so you can see that the bottom is increasing. And I like to call this the rising floor. So if you bought Bitcoin here at the bottom and then you sold Bitcoin at the bottom, so right here back in 2015, what the bottom was about $228. And then if you sold the bottom, and no one does this, no one buys the bottom and sells the bottom. Let's say you sold the bottom in 2018, that 228 moved up to $3,100. And then you look here in COVID, the COVID crash, you're looking at about that sort of $5,000. I think it dipped down into the fours, but it's still higher than here. You can see it's gone up. It's gone up. Okay. And the trend is we're going up again. So right now, after this cycle, we've actually gone up again. So now the bottom is around 1,400 US dollars. Okay. And a lot of people see that as a negative thing. That's Bitcoin's never going to go that low, and they get very emotional about it. And it may not get that low, it may never get to that price. And so the moving average is moving, and it's derived from the price itself. Okay, so and it is going up, it's trending up. So and we're dealing here with 4 years worth of data. So we're going back to about this period here. So we've got all this. Once this data here kicks in, that's going to really that's going to bump up the average. So the average has already included this data. So we can expect the average to increase. We can expect this average to keep going up. So that's the good news for Bitcoin. It is going to go up. Okay, so that's the good news. Now, why I want to point out the bottom as being so critical. It's not so much about, okay, let's buy the bottom and sell the top and get rich. It's not that sort of thing. What it is it shows that Bitcoin and crypto in general, I guess, Bitcoin being the leader, it shows that it is going up. It's not doing this, for instance. It's not doing, if you look at a sideways action, it's not going up, big peak, crash down to the bottom again. Big peak, crash down the bottom again. Big peak, it's not doing that. It's doing something like this. It's going big peak, crash, but the rising floor. And then big peak, crash, rising floor. Big peak, crash, rising floor. Okay. It's showing that overall we're going in an upwards direction. And that's really important. What these peaks are, and everyone focuses on these. Everyone's like, oh, went up 20K here, went up to 64K here, and it's and let's face it, most people were disappointed that it only went to 64K, and there's a lot of belief that people think, oh, it's going to go up higher again, okay? And we can cover that in a future video. It's very difficult to predict the future. To me, there hasn't been a precedent so far for us to do that. A lot of people look at 2013's double peak and says, yeah, this is what's going to happen with us. We dropped this percentage, so therefore we can do that. I'll show you some evidence in a future video why I don't think, I think it's less likely that we do that. I've got a lot of evidence that shows that we're probably going to follow 2017, but I could be wrong, but we'll save that for a future video. That's a whole thing altogether. What I want to talk about here is that the peaks to me don't matter. The peaks here, these are spikes, okay? Just think of them as spikes. There's a spike in enthusiasm. Everyone gets involved. The media gets involved. Everyone gets overexcited. For all intents and purposes, it's a bubble. It just is. It's a speculative bubble. I love Bitcoin. I love crypto. I love the future. I love the direction that it's going. But it's still full of speculation. There's still so much money being thrown around at companies. And the companies haven't delivered anything yet. We're paying for coins that are part of a company that hasn't delivered. Some companies have, but we talk about mass adoption, but it's not mass adoption. It is early adopters. It's like VR, like virtual reality back in the 80s. It's early adopters. One day VR might become this real big thing, and it's sort of growing steadily. The rising floor of VR is increasing, but we're still at an early adopter phase. So these are just spikes, okay? So it doesn't matter that it's 20K there. It doesn't matter that it's 64K there and it didn't reach the heights that we're expecting. That doesn't matter. What matters is the floor is increasing. The floor was there, then it was there, then it was there, now it's up here. That's the proof that Bitcoin and crypto is increasing. That's what we should be keeping an eye on. And I mean, the added advantage of keeping an eye on the bottom is that these are the optimal times to get in, okay? So everyone's keeping an eye on the top, okay? You got to do the opposite to what the herd does. You want to keep an eye on the bottom. And of course, you can dollar cost average, etc., etc. I'm not giving investment advice here. I'm just saying that we need to be looking at the bottoms. That's what's interesting to me, is that the bottom is increasing and it's going to go up again. It's going to go up here. This is just some speculation, but it's actually probably going to increase higher given that this data here is about to kick in. So anyway, that's enough for today's video. There's so much more I want to cover. Super excited to bring all this content to you. If there's anything in particular you want me to cover, let me know and I'll have a look. One of my favorite topics I'm going to cover soon will be the NASDAQ and the .com bubble, and whether crypto could potentially be going through, or could go through a similar phase to the year 2000 and 2010, which was not very kind to the NASDAQ and the tech stocks and the speculative stocks. But if you're armed with that information, you can make much more informed decisions, and you can make some really good investments for the future, even in those times. So anyway, without further ado, that's enough for today's video. I hope you enjoyed the content, and I'm happy to bring more to you very soon. Cheers.